Let's start with what's happening in European bond markets, because, yes, we focus a lot on the volatility of French bonds over the last 24 hours or so, but we're also seeing what this is having an impact on other bond markets within Europe, notably German yields. You say that this is keeping the lower for longer narrative on German yields alive and therefore keeps the euro on the back foot. Just how weak does the euro get from here then, Ven?
Well, I think that the euro is going to be on the defensive for a over the short term. If you look at the wall structure, the term wall structure of the euro, it is showing an inversion that kind of suggests that investors are thinking there's worse to come for the euro in the short term. So I think that, we could do 103 levels, 102 levels, depending on how far the French political crisis grows. But it's not just about French politics that's uncertain in the Eurozone at the moment. We've got plenty of other factors playing into it. We've got a German election, snap election, coming up in February, and we don't know what actions Donald Trump may unveil once he gets into White House in terms of tariffs. So all that are going to keep the euro on the defensive. What is the incentive to bid up the euro at the moment? That incentive is missing, and therefore the euro is going to be lower for longer.
Ven, can I just come back to the European government bond markets, EGBs? Is it a zero-sum game? If I sell France, do I buy Spain or Germany? Does the money stay within the euro system?
Well, I think that, there is a case to not ignore French bonds altogether. You're not going to make money buying French bonds today and tomorrow, but you need to look beyond the short term. If you're going to buy a 10-year French bond, what do you get? You get about 2.9% in yield, but that's not about it. If you decide to hedge the currency risk by surrendering the forward premium in the markets, you're going to get a pickup of about 170 basis points. So that will take you to about 440 on the 10-year French yield. Now, where do you get that? You won't get that even in US 10-year treasuries. So, and then let's keep in mind that France debt is still rated AA minus. So S&P reviewed the rating as recently as Friday and decided to keep that rating intact. So, French bonds are trading more like Spanish and Italian bonds. If you look at the Italian 10-year yield, it's trading at 325. So the gap between France and Italy is very subdued, which means that investors are already trading French as though it had suffered another rating downgrade. And so there's a lot already in that price, and therefore there is some value to be had if you buy French assets at the moment.